Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the sometimes confusing world of corporate filings, and today we're peeling back the layers on Lantheus Holdings and their latest August 6, 2025 report. Let's just say some interesting capital allocation plans are on the table and a new drug application got the nod from the FDA. Before we jump in, if you love getting these clear, concise breakdowns of important company news, make sure you hit that subscribe button and ring the notification bell so you never miss a video. You can also join our Discord community to chat with fellow finance enthusiasts and get even more insights. Link is in the description below. So what we have here is a current report on Form 8K filed by Lantheus Holdings on August 6, 2025. This form is typically used to announce major events that shareholders should know about right away. Think of it as a company's way of giving you a heads up on critical news as it happens. Lantheus Holdings is a company focused on the development and commercialization of innovative diagnostic and therapeutic agents for cancer and other serious diseases. They're known for their work in medical imaging. The key date here is August 6, 2025, which is when all the events detailed in this report took place. This part of the filing deals with the company's financial performance. Specifically on August 6, 2025, Lantheus announced their financial results for the 3 and 6 month periods ending June 30, 2025. This is essentially a public announcement of their quarterly earnings and a look at how they performed in the first half of the year. The actual details of those financial results are usually found in a press release that accompanies this filing, and here Lantheus provided one. It's like getting the official scorecard for their recent performance, but remember, the filing states that this information is merely furnished and not officially filed with the SEC. This means it's a disclosure of information but doesn't carry the same legal weight as formally filed documents for purposes like Section 18 of the Exchange Act. It's a subtle but important distinction in the world of filings. In regulation, FDA fair disclosure is all about making sure that important news is shared with everyone at the same time. It's meant to prevent selective disclosure of material information to certain investors over others. This section covers another piece of news shared on August 6, 2025. This is a big one for Lantheus. They announced that the US Food and Drug Administration, or FDA, has accepted a new drug application, or NDA, for a new formulation of their piflufolastat F18 prostate-specific membrane antigen positron emission tomography imaging agent. This imaging agent is used to help detect prostate cancer. It's a positive step because the FDA accepting the NDA means they deem the submission complete enough to begin their review process for potential approval. This could lead to a new product or an improved version of an existing one for Lantheus, further strengthening their position in the oncology imaging agent. Zingen agent is used to help detect prostate cancer. It's a positive step because the FDA review process for potential approval. This could lead to a new product or an emission tomography imaging agent is used to help detect prostate cancer, so it's a positive, strengthening their position in the oncology imaging market. This section covers any other significant events that don't fit neatly into the other categories. Here we see a substantial announcement about the company's capital allocation strategy. This is perhaps the most significant piece of news in this filing. Lantheus's board of directors has approved a new share repurchase program worth up to $400 million. The company plans to buy back its own stock through December 31, 2027. This is a significant signal from the company that they believe their stock is undervalued, or that they have excess cash flow they want to return to shareholders. Repurchasing shares can have a few effects. It reduces the number of outstanding shares, which can increase earnings per share and potentially lift the stock price. It also shows confidence from management in the company's future prospects. It is also important to note that this new program replaces their previous buyback program that was announced in November 2024. This suggests they are ramping up their capital return efforts or have adjusted their strategy. The filing outlines how these repurchases might happen through normal stock market trading or private deals, whatever is most beneficial for the company. They can also use what are called 10b5-1 trading plans. These are pre-arranged plans that allow companies to buy back stock even when they might be aware of material non-public information. This provides flexibility and ensures compliance with insider trading rules. Now this section is packed with legal jargon, but it's crucial. It's a standard disclaimer that warns investors that any forward-looking statements made in the report, like those about future plans or expectations, are subject to risks and uncertainties. Companies use this to protect themselves from lawsuits if their predictions don't come true. They're essentially saying these are our best guesses, but the real world can be unpredictable. This is where they list all the supporting documents that are part of the filing. This is the press release detailing their second quarter 2025 financial results and business updates, which we discussed earlier. And this is the press release about the FDA accepting the new drug application for their prostate cancer imaging agent. Again, a really positive development for the company. Finally, this refers to the interactive data file, which makes the financial information easier to access and analyze for investors, something we always appreciate here at Corporate Decoder. Now let's put on our investor hats and look at the bigger picture. Lantheus is making some strategic moves. The acceptance of the new drug application for their PSMA PET imaging agent is a significant development. It suggests that their flagship product is getting an upgrade or a new version is coming down the pipeline, which could further solidify if your product is getting an upgrade or a new version is coming down the pipeline, which could further solidify or expand their market share in a very important area of medicine, that being cancer diagnostics. The really attention-grabbing part, though, is the massive $400 million thesis management. In the company's future, they likely believe their stock is currently trading below its intrinsic value, which is a classic Warren Buffett approach to capital allocation. Returning cash to shareholders through buybacks can be a very efficient way to boost shareholder value when the company believes its own stock is a good investment. However, we need to remember that this is a significant chunk of cash, given that Lantheus is in the biotech and diagnostics space, where research development and clinical trials are incredibly expensive and capital intensive. We should also consider the company's overall financial health and its other strategic priorities. Are they funding this buyback from strong free cash flow or from taking on debt? Are they sacrificing future growth investments for these buybacks? These are questions that would ideally be answered in the detailed financial results mentioned in Exhibit 99, the press release about their Q2 earnings. Without seeing those specific numbers directly in this 8K, we can infer that they have either generated substantial profits or have a strong cash position to authorize such a large repurchase program. It's a bold move that signals management is focused on both enhancing shareholder value and believing in the long-term prospects of their product pipeline, especially in oncology. The direction for Lantheus seems to be one of growth and shareholder confidence. They are investing in their core business with the FDA submission and returning capital to investors with the buyback. This paints a picture of a company that's performing well and looking to reward its stakeholders. A key risk for any company in this sector is regulatory approval and competition. While the FDA acceptance is positive, the actual approval of the new formulation and its market performance will be critical. Also, the market for diagnostic imaging agents can be competitive. Lantheus will need to continue innovating and executing well to maintain its leadership position. In conclusion, Lantheus Holdings is showing a strong hand. They're pushing forward with product development and demonstrating financial strength and confidence through a substantial share buyback. This is generally a positive sign for investors, but as always, due diligence on the full financial picture from their earnings release is paramount to understand the true sustainability of these actions. Alright, that's our breakdown of Lantheus Holdings, August 6, 2025 8K filing. What's your take on these numbers and what they signal for the company's future? Do you think the share buyback is a smart move? Let us know in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching. See you next time.